Dollar Canadian dollar daily forecast, January 20th, fxempire.com. The dollar CAD fell on Thursday and even managed to poke through this triangle that we've been kind of paying attention to here recently. So you can see it's a symmetrical triangle. So these are non-leaning. In other words, they don't necessarily predict an up or down move. They just predict a move. There is the possibility, without getting too far into the woods, there is a possibility perhaps of a descending triangle within this pattern. And if that ends up being the pattern that the market follows, then obviously you see lower lows and the same low, or lower highs and the same low. It shows a pressure, a downward pressure, and a breakdown of that, of course, is bearish. But looking at the larger pattern, we can see that there is significant support between 101 and 99 on this chart. So when this broke down to the downside, we had mentioned this yesterday that we wouldn't be overly quick to sell. As you can see, by the end of the day, we have bounced and shown exactly why we wouldn't have sold, because of that massive support. We now have a hammer at an area that's been tested several times. If we can break the top of the Thursday range, we'd go ahead and go long, knowing that we may only stay in the triangle. It may not be a big move, but 100 pips, 200 pips, something like that, before it's all said and done, certainly is doable. As we get up closer to the top of the triangle, we'd be willing to take 1/2 off to lock in some profits, move stops to break even, and if we break out, then so be it. We have a half a position already gained, and if not, then we've gained a little bit from the consolidation. And it seems to be the trade in this, as the oil markets will continue to push this pair around, and in fact are so wound up so tight that the move should probably come simultaneously. If oil sells off, then obviously this pair will rise. If oil spikes, this pair could fall and then rise, as a safety trade into the dollar quickly becomes the issue, because oil will spike mainly because of trouble with the Iranians. Lots of going on in the oil markets, and that's been making this pair very difficult to trade, and it does not look like it's going to get any easier. However, we do see the hammer, and that could lead to a short-term trade.